In just 48 hours, SVB went bankrupt, which is the biggest bank collapse since the 2008 financial crisis. It immediately affected the US stock market, the Eurasian stock market, the banking industry, and even digital currencies. What happened to SVB and eventually accelerated its bankruptcy? At first, interest rate hike and high proportion of securities investment. After the COVID-19 outbreak in 2020, the Fed began to raise interest rates to its inflation. SVB took advantage of this opportunity to widely absorb low-cost deposits and expand their own deposits. Besides, SVB bought bond products, mainly treasury bonds and mortgage-backed bonds, rising to 60.56% in 2021, more than the other 74 major U.S. banks. In the end, the Fed's continued efforts to raise interest rates was the fuse to SVB's bankruptcy, and even caused market panic, with depositors scrambling to withdraw cash. Let's make a hypothesis. A year ago, you spent $800 to buy 3-year bonds. 3 years later, it's expected to get $822. The investment income is $22. But with the rising interest rate, now if you buy the 3-year bonds at the price of $800, you can get $844. The profit almost doubled. The floating deficit is clear. In short, the combination of interest rate hikes and deposit liquidity crisis left SVB suffering huge losses. Second, the catastrophic disaster of startups. Because of the Fed's continued interest rate hikes, the number of listed companies and the financing scale of listed technological innovation-based enterprises declined sharply. As we all know, the customers of SVB are mainly venture capital institutions and technological innovation-based enterprises. However, fiscal expenditure coupled with financing difficulties made these companies withdraw their own savings from SVB. As a result, large amounts of deposits at SVB were being withdrawn to its company's financial pressure. Therefore, deposits in SVB have plummeted from tech freeze in the second half of 2022 to now. Startups are struggling with high interest rates on one side and low deposits on the other. The result is predictable. Third, on March 9, $42 billion was taken directly. Third, on March 9, people withdrew widely, taking away $42 billion, almost a quarter of the total SVB deposits. So why did people withdraw money widely on March 9? Coincidentally, just a few days before the bankruptcy of SVB, Silvergate, a bank whose business related to digital currency, also went bankrupt. The double bankruptcy of SVB and Silvergate is the so-called good things come in pairs, and makes people feel worried about SVB. All depositors want to. The final result is obvious.